Sorry about that. I was just flicking around on the Renko charts. Hopefully you can hear me loud and clear. He is, yes. I've gone back and thanked him. Thanks, Ezzy. Appreciate your feedback on the coronavirus. So it's always nice to get local information. So thank you for that. I have, yes. No, I have. Oh, right. Well, you have to share it then, if we can. Yes, sorry, just opening the chat box again. Just from Ezzy, who is in Australia. Apparently, Melbourne, that's going to be in lockdown for 6 weeks from tomorrow. And then the borders between Victoria and New South Wales have been closed for the first time since the Spanish flu outbreak over 100 years ago, which is extraordinary. And I did actually go back to Ezzy on the chat because Anna, as you know, is Italian, and one of the biggest fears that her parents used to speak of when she was growing up was Spanish flu, and it was always talked of in very hushed tones because it was a pandemic which swept the globe. So, you know, what goes around comes around, unfortunately, and here we are. So thank you for that, much appreciated. Let's just close that down, move that out of the way. I'm actually on cable just to pick up on the theme of the British pound. In fact, let's just go to the CSIs and see where we are, multiple CSIs. Where are we? Sorry, there we are. Where are we? That's it. That's the one I wanted. Sorry, I couldn't see it for a minute. There we are. And as always, the currency strength indicator gives you so much information. It guides you to the pairs to consider. It guides you, or it tells you what pairs not to consider for the time being. It gives you information as to whether a trend is underway, whether there is congestion, whether there is a potential for a reversal on the horizon. So whether you're a trend trader, you like jumping in a trend that's already underway, whether you're quite happy to take on reversal trading, which you have to be more patient for, and also requires a bigger amount of risk on the table, because what you have to allow for in all reversal trading, and many of you know I'm a reversal trader, I like to look at the extremes. That's where my eye is always drawn. I'm always looking up the top here for potentially overbought, and down at the bottom here for potentially oversold. So when you're looking at those regions, what you're looking for is to jump on the trend which is starting to develop. You can see here the dollar, we got up here into overbought. This is on 1 minute, by the way. This is very quick. So we've got 1 minute, 3 minute, 5 minute, and over here we've got 10 minutes. So we're down in the faster time frames per se, but the principles are exactly the same. And what we're seeing right now is we saw the dollar here get up to the top, overbought, flip-flops around, up again, back into overbought again, and now it's starting to sell off quite strongly. But bear in mind, this is 1 minute, so this is real scalping territory. But as I say, the principle is the same. And when you're looking up at the top here, you're looking for other opportunities. We've got the Swiss franc, did pretty much the same thing. But the point I wanted to make is this, and you've got it very much over here as well on 3. If you're going to trade reversals, you have to be patient, because the sharp reversal we saw in the pound, it didn't actually get up into overbought. Not that these are significant levels, they're just a guide for when a currency is approaching that sort of area where it might be reaching overbought or oversold. On this occasion, the pound reversed very strongly, but you've got to remember, of course, that we were coming into, this is 7:55 our time, this is 8 o'clock our time. So we're heading into the London Open. The precursor to that is, generally speaking, is dotted with volatility, trap moves, volatility moves, all sorts of reversal shenanigans going on through both pre and post the Open. But generally what you will tend to see is this sort of price action, and then the move starts to develop. And that's why you need patience, because patience comes at a price, because you have to set a stop loss that's wider to allow for this buffering of price action. Once a trend's underway, for example, once the pound started selling off here, and it's selling off very sharply, and this is another facet of the currency strength indicator, what it's telling you here loud and clear is that the The strength of selling in the pound is strong, purely by virtue of the fact of the steepness of this line. The steeper the line, the stronger the selling. This is pretty much vertical. So this has plunged very quickly. So the strength of the line, the inclination of the line will give you a straight heads up in terms of strength of selling or buying in that particular currency. Equally, you can see in the Japanese yen here, the magenta line, that is rising equally as strongly. So for this phase of price action, which is relatively short, between where we are 745 down to sort of where we are now 815, we've got a little bit of a reversal coming up on the pound, so we've got a little bit of buying coming in. But in that sort of 15-minute segment, the trend on pound yen would have been very strong because you've got very strong selling of the pound and you've got very strong buying of the Japanese yen. And that's what the CSI reveals. Now, what it also reveals is which pairs to avoid, which pairs are going nowhere. We've got the dollar here and the yen rising together, so I can tell you straight away that it wouldn't be worth looking at that right now because they are going in the same direction, and they're going in the same direction with pretty much the same strength. So it's exactly like two parallel train tracks, which I've used many times before as an analogy, where you have two trains traveling on the same track, maybe pulling out of a station. There is maybe a slight difference in speed. So one is perhaps moving a little bit faster than the other. So to put that into the trend context, there's maybe a very minor trend developing in terms of strength, but it's not going to be anything like as on the pound yen, purely because they're traveling in the same direction with equivalent momentum, if you will. And that's also true of this bunch down the bottom. You've got the Aussie following the New Zealand around. You've got the Euro here following those two around as well. So in terms of isolating out pairs, you're not really looking at these unless you're trading some sort of congestion strategy using options, for example. So you're constantly looking at the CSI across multiple timeframes to give you a heads up as to what is going on. Now, clearly, when you go down to the slower timeframes over here, what you're seeing over here on the 1 minute time frame is a microcosm of what is going on over here on the 10 minutes. So what we're witnessing here at the moment in terms of the pound, let's take the pound yen or the pound dollar, let's take the pound dollar, for example. There is a little bit of congestion. There'll be a little bit of a pullback. We've had a little bit of a rally, but now we're picking up the longer term trend, if you will. And in terms of longer term trend, what I'm referring to is over here on the 10 minute. This is still heading down quite sharply. There's a little bit of a curl on the 5 minutes, so there is some buying coming in, but we've seen it here, got down here, tried to rally, weakness again. So in terms of a 10-minute trader, the 10-minute trader is probably sitting there quite happy if they're in pound yen or pound dollar. In terms of picking which of those you might like to trade longer term, then what I would suggest is that, and this is a facet of the CSI, is where that cross is occurring and whether the currencies themselves are equally balanced in terms of where they are in terms of travel. And what I mean by that is you can see here the cross here is pretty much bang in the middle. So in terms of a trend development on the pound yen, you've got a lot of travel potential for the yen to go to the upside, and you've got an equal amount of potential for the pound to go to the downside. So where you get a cross that's pretty much in the middle, doesn't have to be in the middle, but around that sort of region, then at least from a trading perspective, provided, of course, those currencies continue in the same direction, there's no guarantee they will, and obviously you're onto the chart at that point. But if that is the case, then the potential for this is much greater than if, for example, you were looking at the pound dollar, because the pound dollar, the dollar is right up at the top. It's moving into overbought already. So yeah, the pound can carry on selling and go all the way down into oversold, but you've also got the risk of seeing the power, the US dollar as it is at the moment. It's getting up into this region and has much less potential travel. There's nothing to say it doesn't continue right up, could go right up to the top, and occasionally they do. But it's just looking at it from the perspective of potential. It's all about risk, this business. And, as I've said many times when we go to the charts, in fact, let's hop over onto the charts now. Where are we? There we go. That's it. Right, there we go. This is what's going on in terms of cable right now. And this is on, where are we on there? We're on 5 minute here, okay. So we're on the 5 minute time frame. And this is the trend we're seeing, and that's why we're seeing such a strong trend. This is on 15 seconds, so bear in mind this is very rapid. Then we get up into the minute time frame, then we're up into 3, up into 5, over onto 10, and down onto the daily for cable. So in terms of the trend, it's developing nicely. We've got, let's just take a check round and see what we can see. Let's pop up the 3 minute here. There we go. This was 6 o'clock, so 6 o'clock through to 7 o'clock, that's fine in terms of volume comparison. Then we get the European Open, 7 o'clock to 8 o'clock, that's fine. And then we get the start of the London Open, and that's what we're witnessing right now. And that's why we've got this huge increase in volume. It's typically what you expect to see. If you don't see it, then it's guaranteed there's some sort of trap move going on, or there'll be volatility. You can see the little reversal we had there. That was apparent on the CSI. That's almost our highest volume on the session. What happened? We had weakness coming in here. That does not look strong at the moment. Why? Because we've got a wick to the upper body. We've got a lot of volume driven into that price action, and it doesn't look strong at all. The next candle then follows through, and it's really just reinforcing that view. We get a pivot to the upside, decent volume below it. Again, we've got a wick to the upper body, pretty narrow spread on that one, a lot of volume driven in there. And the next candle confirms that we've got decent selling on the way on the next candle. But then what we see is we see a little bit of buying coming in on this candle. So we've got lots of volume, good downspread candle, but it's got a decent wick to the lower body. And we've also got the next one coming in here. So we've got volume, we've got buyers coming in here. There are buyers stepping in here, trying to hold the price up. Be interesting to see what the next candle does. You can see the trend monitor here is reverted to red. We had the extended phase. We started over here. We had the trend monitor in blue. Then we had the volatility candle here. We had one here. Into congestion, it's what we expect to see. Then we get another one. Not huge volume, but bear in mind this is in the European Asian, this is in the Asian session. So that volume is fine. We can compare that, but we get a volatility trigger. What we're expecting to see is either congestion, potentially reversal. In this case, we get a full-blown reversal. We come down through all these levels. None of these platforms hold. This is a very strong platform of what was support at that time, down to the volume point of control. There's an effort to rally through it. It holds. It now becomes resistance overhead. It's pushing down. We break through another level here. We get another volatility trigger. What are we expecting? Congestion or reversal. In this case, we get congestion in the spread of the candle. This is the power of this indicator. It's just so powerful. Then we go down into the next leg, bearish, 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 coming down. Then we get some minor buying coming in here. You can see it, lots of volume. Now we're into the European session. So now we're looking at comparing volume through this phase of price action. We can't compare volume here with over here because it's a different session. So we expect to see an uptick in volume, which is what we get. A little bit of buying coming in here. Doesn't look terribly strong, falling away. Then we hit this resistance level here, which is very strong. It was support, but is now acting as resistance. There's an awful lot of volume in here as well, which is also creating a solid wall of resistance from a volume perspective, because we look at resistance from both volume and price. This indicator is the accumulation distribution indicator and is based on price. The thicker the line, the heavier is that region of support or resistance. It does it automatically. It's constantly checking against the number of times that level has been held by the price action bouncing off it, and then paints the price action thicker accordingly. So you get this incredible visual vision of all the various levels. This one here is very minor. The one that's being, this level here is acting as support right now. Let's pull it open a little bit, maybe see a little bit better. Only been tested once. That's why it's very thin. There's a very thin blue dashed line here through here. But if this is tested again and again and again, it will start to build into a strong platform. But at the moment, it's pretty weak. You've got other weak levels up here, which the price action has gone through pretty swiftly. But these levels up here are very strong. And just while we wait to see whether that develops further to the downside, just want to pop up the daily chart for you, because the same principle applies here. And it's pretty important in terms of the daily. There we go, just pull that out. You can see this level here. Now remember, as you go down into the slower time frames will always carry more weight than faster time frames, which logically makes sense. If something's happening on a 1 minute chart, you wouldn't expect that technical perspective to carry as much weight as if that was on a 5-minute chart or an hourly chart or a daily chart. And that's why multiple timeframes are so important, because when you're looking at it down from your fastest into your slower timeframes, it doesn't matter if it's a 1, 2, 3-minute combination or you're trading an hourly, 4-hour, daily, whatever. The same principle applies in that whatever is occurring on the slower time frame will carry more weight purely by virtue of the time. And you can see it here. We've got this level here. It's been tested over the last 3 days. It's continuing to hold good for the time being. We're trading in a relatively narrow price spread at the moment, but from an intraday perspective, there's plenty of opportunity. But that's what's capping progress at the moment. Cable's trying to break away from the volume point of control. If it does manage to break through that region, then the good news from a longer term perspective is we have volume here falling away quite rapidly. So if Cable finds that either through virtue of strong buying of the pound or conversely strong selling of the dollar and manages to break through here, then it should move through this region certainly from a volume perspective at any rate, relatively easily, because as it rises, gets through up to 1 in 26 and beyond, that volume falls away pretty rapidly. And it's one of the beauties of the volume point of control. Yes, the volume point of control gives you that perspective. This is the fulcrum of the market where the yellow dashed line is. It's like the seesaw analogy where you've got 2 people of equal weight and they balance one another, so the seesaw doesn't move. As soon as one gets off and maybe a lighter person gets on or a heavier person gets on, then that's going to move away because there is a differential. It's exactly the same with the volume point of control here. You've got the heaviest volume concentration. You're expecting congestion because you're trading at the volume point of control, and that's what we've got right now. Now, as it breaks away, what you're looking for thereafter from a volume perspective down here on the volume price relationship is you are then looking for strong volume to signal that that is a solid move away, supported by the buying or selling, whichever direction it's moving in, and the sentiment then picks up that particular trend move away from the congestion phase. Let's just pop that down. So that's where we are on the daily. Let's just pick up where we are. Seeing some decent selling, that's on the 1 minute. A lot of volume driven into that particular candle. Effort to rally. Bear in mind this is 1 minute, so we're talking at pretty quick charts here. The trend monitor you can see is maintaining that bearish trend, and the beauty of it is this: that when you get these little rallies here, and perhaps you've got some decent profit, you've got in maybe earlier, maybe got through on a break here, you've got into this trend, you've got some decent money in the bank, and then it starts to drain away. And that's the point at which you start to panic. And that's the point at which many traders will close out because they're fearful of losing something they've already got, something you've banked mentally, you've banked it financially, and then it starts to dwindle. And that's the power of the trend monitor. What it does is it takes a more considered view of the trend. Yes, it transitioned into a darker color, but it's come straight back out the other side. And it's just helping to hold you in. And if you use that in multiple time frames, it's so powerful. You can see it on 15 second. Obviously on 15 second, it changes pretty rapidly, but nevertheless, the principle's the same. We're still in bearish territory here on 1. No change on 3. Wouldn't expect to see it on the trend monitor at that point. It's just that's fine. We've had a little bit of a pause point, but it's not going to cause it to change color at all or even go into a darker color. And we've got nice strong candle here, lots of good volume under there. That is strong selling right now. There's nothing particularly to say that's going to reverse at the moment. Down onto 5. What have we got on 5? Nice volume here. Bit of a pause point here, just reflecting what was going on, but wicks top and bottom. But again, going back to the trend monitor, yes, we had a little bit of a transitional color here as we reversed up. Again, note the fact that we've got this. We broke through this one. We got through that one okay. Bear in mind with the European session here, so the volume is as we expect. We can look at volume through here. Then we get a 2-bar reversal. We get a bearish engulfing, capped off with this resistance acting in play here. We break through this, which is a good sign. Then we start to see rising volume on the downtrend, and that's what we want to see. This is weak, wick to the upper body, nice. On into the price waterfall. That is a classic arrangement. You've got widening spreads and you've got rising volume. It's looking pretty bearish. We get a bit of buying coming in, doesn't really go anywhere, reversing again now. And now what's happening is we're coming through down into this low volume region on the volume point of control. And what we expect to see here is the price action move through pretty swiftly, because there's nothing in terms of volume at any rate to act as support at this point. And then of course you go up onto the slightly slower time frames, up onto 5. It's constantly scanning up and down. We've got low volume here as well, which is nice. So, you know, we expect that to move down there reasonably rapidly as well. Up onto 10 minutes, what's happening on the 10-minute chart, that looks all pretty good and dandy. Nice move. Low volume again. You know, this is going to move through there pretty swiftly. There it goes, you know, bang, bang, bang. I've got the volume switched off here, by the way, because I've got so much data coming in live stream that this is clicked off on the indicator, but you can put it back on again. If I just go into the indicators there, volume up, down is, where are we? Volume up, down, there we go. I've got it on bar close, but if I change it over to on each tick, then it'll start to fill. There we go. So you get an instant readout on whether volume is higher or lower than the previous. You can see here it's building to higher. So we are at 8:28. We're on the 10 minutes, so we've got a couple of minutes to run, provided that candle closes without a deep wick to the body, and it may well do. If there is a deep wick to the body, then we'd like to see some buying coming in. So we'll just hold on for a moment, just see how that develops. But this is a nice, you know, this is a nice straightforward trend. And if we go over onto the currency, let's go to the currency arrays. Where are we? There we are, up at the top there. Oh yeah, okay, I'll hop onto the heat map as well, no problem at all. So if we just isolate out, let's isolate out on the dollar. Let's just pop that on the dollar there. Maybe let's just isolate on the pound here on the slower. So we're looking at the pound dollar, and you can see here on 10, on 15, you know, it's got a way to go yet, so that's fine. The question you've got to ask yourself is this. Where are we? Let's have a look. Over here, we've got the pound dollar over here. So on the very fast time frame, this is on 3 minute. This is looking okay because we've got heavy selling on the euro, pound, New Zealand, and Aussie. So they're all pretty much aligned. What's interesting is that we've actually got buying of the dollar CAD here, that's fine, we've got that, and the dollar Swiss is a little bit of a lag on at the moment. So in terms of what we're looking at from a dollar perspective at any rate, that certainly looks okay because everything's kind of aligning. What we want to see here is we want to see the dollar Swiss moving up. We want to see these guys moving down. An ideal stack, of course, is to have these all at the top. So we have dollar CAD, dollar yen, and dollar Swiss all at the top. So we've got strong dollar buying there. We want these all stacked at the bottom. That will be a perfect array. And that may well develop over time. In terms of the strength of the trend, what the currency array also tells you, clearly from a visual perspective, is which trend is strongest. And ironically, it's not cable at the moment, it's actually Aussie dollar here. You can see it down at the bottom here. That's, again, it comes back to the inclination of this line is telling you the strength of that particular trend. And it's very strong here. You probably can't see it, but we've actually got cable and euro dollar superimposed here at the moment. So there are definitely two there. So there are one on top of the other. Then we move over onto the slightly slower time frames here of 10 minute and 15 minute, because we want to get a perspective on the pound. Because if we're selling pound, is everybody selling pound? And the answer is, at the moment, the answer is no, because up at the top here, we've got pound Aussie, and that pound Aussie is rising very strongly. The question you've then got to ask yourself is, why is that happening? Is that happening because we've got strong pound buying in that particular pair, or is it happening because we've got very strong selling of the Aussie? And it would tend to suggest the latter, because you've got down here Aussie dollar, strong selling the Aussie, we've got strong selling the Aussie. This is what you're trying to tease out the whole time, because when you're trading a pair, you want to see universal sentiment, ideally for both sides of the equation if you can. So in terms of cable, we want to see strong selling of pound and strong buying of the dollar. But what we've actually got up here at the moment, which is, I would say, worrying, but you know, you've got to be aware of these things, that if you're trading this, you know, what's driving it? Is the market universally selling the pound, or is there some local reason? And we've seen it so many times over the last 3 or 4 years with Brexit. The complex for, let's say, you know, a dollar will generally be moving in one direction, but perhaps cable will be moving in its own orbit, purely because it's being driven by fundamental data, which is local and extremely significant. And you see this in all countries where you get local news, which dictates that particular currency against in that particular region, whereas when you look across the complex, it is not the same. So wherever you're trading, don't trade a pair in isolation. Look at the currency array, look at the currency matrix, which will also give you the ranking of those pairs intraday across all the timeframes and also give you a view on sentiment. What the currency array also gives you, of course, is it gives you this second ladder here of giving you a heads up as to when those currency pairs, in terms of pairs rather than individual currencies, are approaching potentially oversold or potentially overbought. When they're potentially oversold, they appear in these darker colors with the brackets. When they are reaching oversold, they go to these brighter colors of darker red and darker blue. I haven't got a brighter blue, rather. Haven't got a brighter blue at the moment. So, please be aware. Let's just head over to the currency matrix. Sorry, I've got the chat box closed off. Let me just see what the question was. The heat map. I tell you what, let me pass back to Anna, and then I'll come back to the heat map if I may.